Is applying with multiple lenders a good idea when buying property in New York City? We'll demystify this topic in the following video. I'm Nick at Houseit. Visit houseit.com to learn how to save money if you're buying, selling, or renting real estate in New York City, Long Island, the Hudson Valley, or South Florida. So let's get started. So, is applying with multiple lenders a good idea? Well, this is a matter of opinion, but in our personal opinion, we do think that it can be a very good idea in many circumstances. Let's start with one of the main reasons why you should consider applying with two lenders. The first is that of timing. Now, we all know that the demand for mortgages and the demand for refinancings does vary based on prevailing level of interest rates, as well as what type of rates the lender you're considering has been offering over the past few weeks and months. If that lender is overloaded with applications because, say, their rate has been super competitive, well, that means that your actual commitment and underwriting process may take longer than usual. It could take perhaps 4 weeks, and you never know, it could potentially take longer. So it's possible that there may be a mismatch between the mortgage commitment deadline or timeline in the contract and what your lender is able to mobilize on. And ultimately, there's never any guarantee that the seller will agree to extend the commitment deadline for your particular transaction. So if you really want a property and you don't want to lose out, let's say it's your dream home, let's say you've been in touch with the seller for years, or whatever it might be, you don't want to risk losing it out because of like a week or two's delay with your lender. So if you apply with two lenders, of course, then you'll basically have two options, and hopefully one of those lenders will be able to meet the commitment letter timeline in your contract. The second reason why applying with more than one lender is a good idea is because it will minimize the risk of just being randomly rejected. You never really know what's going on inside of some of these large lenders. There could be politics at bay, there could be potential downsizing of operations. You never really know what the reason might be. Perhaps your financials are quasi-borderline, maybe they've changed their guidelines, but from time to time, there is a rather unexpected and surprising denial. So, if you have applied with two lenders, then you're protected. Now, of course, if you get denied by one lender, technically there's nothing stopping you from applying with a second lender, but of course, you still have that mortgage commitment timeline in your contract, and it's going to be next to impossible having waited for your first lender only to receive a denial. Only then would you apply with the second lender. You'll invariably have pushed beyond the typical 20 to 45 day deadline in your mortgage contingency in the contract. Another reason why applying with more than one lender is a good idea is because it allows you to have more than one appraisal. And as we know, banks typically will only lend based on the appraised value. So if you randomly get a difficult or confused appraiser who is not in touch with the market, uses bad comps, and you randomly get a low appraisal, well, that means that your loan size is going to be smaller. And that might be a problem for you depending on your financials. So if you apply with two lenders, you have two complete standalone independent appraisals going for you, meaning you've completely mitigated the risk of being penalized by a random appraisal from, say, the first lender you may have applied with. Another reason why applying with more than one lender is a good idea is if you are falling into what we would call like a special situation. A special situation could be, say, for example, that you're self-employed. Now, there's nothing super special about being self-employed. There's tons of self-employed people, but lenders do view it as being a rather special situation. In other words, they have different guidelines and varying guidelines for self-employed individuals across lenders. Some lenders may take like a 2-year average of your income. Other lenders may have a certain trigger. If your income has gone up or down by a certain percentage, it could potentially cause a problem with the overall approval. So, if you are self-employed and maybe the math is tight, you really should consider applying with two lenders if you want to make absolutely certain that you will close on the property you're in contract on. Another so-called special situation would be if you're purchasing an investment property. And the reason why this is a special situation is because each lender will have different guidelines for how they calculate your debt-to-income ratio. Let's say lender A, for example, might only give you a 50% credit on the potential rental income for the property that you're buying, whereas lender B may credit you 75%. So depending on how these underwriters at the different firms process your income, it will really impact your debt-to-income ratio, and it could make the difference between an approval and a denial. So just to summarize this last point, we recommend applying with more than one lender if your particular situation is a special situation. Special situation means that there's something about the property you're buying or your financials or your employment that results in there being potentially divergent or different underwriting criteria across lenders. In other words, if your debt-to-income ratio is tight, then you really should consider applying with two lenders. Now, one example of this is with respect to retirement contributions. If you are self-employed, you can put a pretty large amount of money away in a SEP IRA each year. But many lenders actually will only calculate your DTI based on your adjusted gross income. And your adjusted gross income actually is a function of deducting the potentially gigantic SEP IRA contribution that you may have made. So in other words, you're being penalized in terms of your income for a completely voluntary retirement contribution that you elected to make. So this is an example of something which does vary by lender. So if the numbers are tight for you, then we strongly encourage you to apply with a second lender. Now, before we let you go, we just want to mention the obvious downside of applying with more than one lender, and that is cost. You certainly will have an application fee for each lender, typically $750 to $1,000, and also you'll have to pay for the appraisal, usually upfront, and that's another $750 to $1,000. So it will ultimately cost you a few $1,000, most likely, to apply with a second lender, but the big picture must always be considered. If this purchase is really important for you, if it's a really special property, or if your retirement and lifestyle planning necessitates the purchase of this property for an investment or whatnot, you really do need to, I think, make this small investment and consider it almost like a form of insurance to make sure that you successfully close on the property. Now, of course, if you are buying a property in New York City, we can help you save money here at Houseit. You can learn how by visiting houseit.com and check out our Houseit Buyer Closing Credit Service. We hope to hear from you, and if you have any questions, you can leave a comment below, send an email to team@houseit.com, or give us a call, 888-494-8258. I'm Nick at Houseit, and we'll see you on the next video.